Okay, everyone, without further ado, let's get this party started. I'm just closing out of the music here, pulling up Anne Marie. And so let's see here. Can you hear me all right, Anne Marie?
I can.
Perfect. And then you should now have video access as well. And as I'm just finding Zoom here, but it is so good to be here with you. How are you?
I am well. I am well. It is uh, early still, but excited to be here and taking a look at the markets and sharing uh, with everyone my 20-year journey here.
Absolutely. Yeah, I'll just stop sharing my screen so that they can see you a little bit better. And you've been working with Benzinga for a while, but do you just want
Yeah,
to give people an overview of your trading journey?
absolutely. Thank you, Jonathan. My trading journey started with an idea that I thought I would be really good at doing the work, and then finding out it's much harder than you think it is. So, for those of us who've maybe nibbled in to the markets a little bit and tried to understand how to trade, it really is something that requires a lot of study and patience and time. And so, because of um, my desire to share, I'm here with Benzinga and have been with them for several years. My goal is to tell you that when I began trading, it was hard for me. It took me years to get it, but I'm almost 20 years in, and it's an adventure. I was telling Jonathan last time we spoke that I literally run to my desk. I love what I do. I'm on holiday here in Hawaii, and it's nice to be able to chat with folks for a few moments, leave some things that can allow you to help your journey be better, and that's what we're going to do. Um, for me, what I started was as someone was a complete novice, and today I sit with you as the author of two books on financial media. Um, I trade all over the world. I speak all over the world, and I love what I do. And what I want to do today is impart some of that knowledge.
Awesome. I'm really looking forward to that. And just to give everyone a heads up, what we'll do is we'll show you how Anne Marie prepares for her trades, where she does post some trades as well for her community, and then just start from the ground up. Where are the basics? How should we even think about options in a way that can help us be more consistent and more profitable along in the long run? And then we'll look at what is involved in executing a trade later on in today's presentation. So, Anne Marie, where do you want to start with how you start researching your trades and we could take it from there?
Absolutely, absolutely. So first thing I'd like to do is share my screen, and I'm going to start at the Benzinga platform. I'll put us up here in this little corner. Um, and what I do in here is really get a look at how the market feels from the information. And as a professional, which here's the thing, if you want to get good at this work, you have to approach it as a professional. And a professional knows what's coming down the pike or down the river, whichever one you want to use, in terms of releases. And so over here, I have calendar economics, and I have it for the entire week. So I start at the bottom and I want to know who's doing what. And so everything is, of course, on Hawaii time, which you're looking at these weird time frames. But what I want to see is who's doing what and when. And so I will look for um, trade balances. I will look for FOMCs. I will look for how well an auction does. Today, we have a speaker, a Fed president, which is very unusual, not in these days, but long ago when I first started trading. FOMC presidents weren't, that's Federal Open Market Committee. Those are the guys that set interest rates as a team. We never knew who anybody was except for the chair. And now everybody gets a speaking voice. And I think it's because, they're really sort of promoting their next gig. So what I will do is look through these spaces and I will say, hey, what's going on in the market space? And I'll get a feel for how the charts are looking. And so I'll have my first tab here is called Trade Ideas, and I have the Benzinga Pro Lounge here. It gives me all of the stuff that folks are talking about. Here someone says, hey, listen, don't forget this Fed guy is talking in a little bit. It's going to affect the way the market moves. And that needs to be something that you consider. You can't just go in and say, hey, I'm looking at XYZ. I want to trade that. And so you just jump right in. You've got to be cognizant of what else is going on in the market. And so that is a pretty important thing to look at. The next thing I look at is news, and that's news on, I am going to move this down. I have this news on level of importance. I have categories. And what I'm looking for is what's really happening in the broad market. And so this company, Ball, is really an incredible company. Not too many folks really talk about this company, but it's over 100 years old. And those of us who know Ball jars, because we've had a grandmother that canned or something like that, will know that that's them. And they've just done a tremendous job. And so now they're purchasing wind energy because they are considering being a little bit more green in that space. So this is where I start. It's where I come every single morning. I look at my scanners and I see, okay, who's running solid pre-market, who's running solid during the market, and those give me a nice good feel for where it is I might want to look for things if I want to trade intraday. One of the big stocks that I like to look at really, or an ETF that I like to look at because it helps me with my soft commodities, which is what we're going to talk about just a wee bit. My soft commodities event, this is Brazil. And so if I'm looking at that and I say, hey, I want to figure this out just a little bit more, I'm going to slip to my next tab. I'm going to put up Brazil there, and it's going to show me that it's lifting off of this edge. And so it makes me even more secure that over the long haul, anything that I touch from a soft commodities index is going to do well. So as traders, we can look at Benzinga from the instant trade or the longer trade. Because the market is so volatile, and what we want to look at here is SPY, when the market is volatile and it's got downward motion, but then you see it lifting off the bottom, places like this, and then of course, places like this, it tells you that the traders are really trying to move price action up. So although trend is down, I don't really want to short here because what the traders are trying to do is run the price action up into past areas of resistance, right? And so I use the strat a lot. It helps me. And also the strat is here at on the Benzinga space. And the strat moves the market into a space where you go, hey, am I moving up? Am I moving down? Am I moving sideways? That's going to be the smallest thing that you can think about from that perspective. And so here, I'm going to be looking at charts that give us that motion, and then we'll be able to move into the formation. So one of the bigger movers, we'll talk about this a little bit, is a wheat fund, and that is WEAT. And this is a $12 stock that is really moving quite significantly. Let's see if we can get, Jonathan, can we get this to, yeah, here it is. Never mind. Let's go to a monthly chart here on wheat. You can see how savage this move is beginning in May. And so for the month of May, this has just rocketed up. Here is February. No, excuse me. Here is March, April, May. In March, savage fade down. And so now we're looking for this to pull back, but to still hold. So we've got a long time frame that we're staring down just a little bit more. So from this space, we've got, hey, that's what I'm doing. So now we go to the actual details in a mechanical motion of the trade. And so what I want to talk about is, how do we position? And so, Jonathan, is it a fair place for us to stop right here and say, here's what we are talking about, or are there some questions in there? What do we have going on here?
Well, I think I'll just tease a little bit here in the bottom left corner is a trade that you posted from this afternoon. Actually, just with less than an hour ago. So we
Yeah.
will get to that, but I think that presentation with the slides on the basics is
Okay,
that where you
would
want to go
you?
next?
Sure. Let's you run that for us, and we
Okay,
will
perfect.
we'll walk through that very quickly. Now, what I'd like for you to do in terms of participating, if you could pop in and just tell me how much options experience you have. If you feel like your options experience makes you think that this is a scary place, if you understand a little bit about the option space, I'm going to go from little to big. So everybody who knows the option is going to go, I know that, but then I'm always going to be adding those little nuggets in there that say, all right, here's what you want to consider when you're staring something down. So just let me know a little bit, and then that will be, that'll be great.
Awesome. And I'm just sharing my screen here, throwing that on a slideshow. Can you see that okay?
Oh yeah, that's great.
Perfect.
Okay, so the reason we call this Moneyball is because we're going to use the topics of Moneyball. For those of us who might not know what that is, it is a strategy inside of baseball that works on trying to get the biggest bang for the buck. And so they look for traders who have, they look for players who have skills at doing one thing, and that's getting on base. And so if you can get on base, it's much more likely that you'll be able to score. And so we're going to use these Moneyball concepts, statistically speaking, and what they're going to do is push us to increase when we win and how much we win. Okay, great. I love this. Thank you so much for the answers on the Q&A in terms of where you are. So terrific. All right. So here's one of the very key things. Thank you so much for running this, Jonathan. That's fantastic. I like how you're moving them across. We talked about becoming a professional. So the big question is, if you gave someone a ton of money or a significant amount of money to you, and you said, hey, manage this for me, what do you want them not to do? You want them not to lose money. If you go in there after you're paying them a fee and they go, yeah, but we're down 20%, you're going to say, what am I paying you for? See, in the same way, you've got to look at your accounts like that. Focus on what can I lose, not what can I make. And so what that means is you manage risk, and that means you make money in small incremental upward places, and that will allow you to move your balance up in a greater, easier, more streamlined way that will build confidence. One of the biggest things the market does is shred your confidence when you make a bad trade. All right. I mean, and we all know that feeling where we've done a ton of studying and we're like, oh, this is it. And you take it and it's the pits. So that's really what you want to do is you want to build emotional capital and you want to build physical capital. And that's how we do it. So let's move ahead to the next one. All right. So that is that space, Moneyball. And that's what we're going to call this series from this space moving forward, because we're using the mechanics of probability to keep us in good shape. And so let's talk a little bit about what an option is. Okay, so I love options because options give us the ability to control a lot of stock for a very little price. So every option controls 100 shares of a stock. And so if you buy one wheat option, which we will, WEAT, that will allow us to control 100 shares of wheat. Now, wheat today is going for about $12 a share. And so if we wanted to go buy 100 shares of wheat, we would pay $1,200. However, if we want to buy an option that allows us to buy wheat at $12, we can go to the option chains, and that's going to allow us to do that. And it's going to allow us to do that for a much cheaper price. Currently, it's about $145. So instead of $1,200 you have exposed to the market, you now have $145 exposed to the market. And so that option, that call option that we're looking at, because we expect price to run up, that call option gives us the right to buy the stock no matter what price it is in the market. If we buy that call option today and tomorrow we go into the market and it's $15, we get to go in and buy it at 12 no matter what. Okay, so that's what a strike price does. And when we buy an option, it gives us the right to control that stock. When we buy a put option, pardon me, when we buy a put option, it also gives us a right, but it gives us a right to sell. Okay, so that means, let's say you had, remember Netflix had this catastrophic fade, and let's say you bought a $500 put on Netflix. Whatever Netflix is doing right now, I haven't looked at Netflix today. No matter what it is, you get to go out and sell it at that price because you bought a right to do that. So when you buy an option, you always get a right. And when you sell an option, it creates an obligation. So the question might be, why do I want to sell an obligation? Right? Why do I want to sell something and create an obligation? I can totally understand wanting the right, okay? But selling gives me that obligation. So why would I want to do that? And so what I want to talk to you about is the simple thing that we all know about, which is leasing a vehicle. And I'm not sure where that is on the slides, Jonathan, but we can put that in there. So when we go to a dealer, right? What we want to do and we decide, hey, I really want to have this vehicle. And let's say the vehicle is expensive. Let's say it's 45 to 60 grand. And so your car payment is going to be, I don't even know what that would be. Let me give you my own example. Okay. So the last vehicle I leased was a Jaguar, and the base cost price was 103,000. And so from yes, sorry, I'm in a conference center, so we've got somebody here. So when I have paid, if I go out and I say, hey, listen, I want to buy this vehicle flat out, my car payment would have been about $1,500 a month. Because I did not want to keep the car long term, I engaged in a lease. And so what a lease does is take the money up front and it tax it on the back, right? So instead, my car payment was about $890. Okay? And so you might say, well, why do I want to lease a vehicle? Well, I want to lease it because every 3 years I get a new vehicle, and I don't care about putting the money into the car. I'm always going to have a car payment. I'm okay with that. What the lease does is say, hey, you can do that for cheap, and you give the car back to us at the end of the lease. The obligation is I turn the car in at the end of the lease. The right is that I get to drive a nice vehicle, right? And so when we look at the option space, it's just like a lease when we do something like a spread. Okay, so someone said, hey, I'm familiar. I sell puts because I have stock. I sell calls because I have covered calls. Again, when you're selling options, you create an obligation. And so that obligation is, if you're selling a put, you're obliged to buy that stock at that particular price. So now let's talk about when an obligation comes into a view. And so what I want to talk to you about is, let me share my screen again. All right. Great. So what I want to do is go to my platform, and I want to show you this. Okay. So here's Thinkorswim. And hey, listen, if you don't want to see me because it's distracting for you, then just, move me out of the way. The big premise for those of you engaging in the market, we are in the midst of a bear market bounce, and it's going to put a lot of traders who are very bearish on the wrong side of the trade. And so what that's going to do is, because we've had days where we go straight up and then the very next day we go straight down, we go straight up and then straight down, or a couple of days straight down, it's going to make people choose the wrong side of the position. But some very big things have happened in the broad market. You can count on me to share those sorts of things with you on the Benzinga platform as I see them, because I'm there to also help you go through the trade. But now what we're going to talk about is why an option gives us that space to go, well, why do I want to create an obligation? So let's take a look at wheat, okay? Because we're going to be talking about this exact trade, and because this trade is all the way out into October, where we've got peak harvest of wheat, particularly in those spaces, getting to market, having them in the granaries and all that sort of stuff. There's going to be time to put this trade in, and you're going to have the ability to watch it run over time. All right, so here's the thing. Let's say I buy this option. It's going for $12. The stock is going for $12 right now. So we're going to go to the Analyze tab, right? And this is the trade that we put on earlier today in the market. And so what I want to do is, I know that's hard for you to see. What I want to do is snap a shot of the spread, and then snap a shot of, what do I want to do? I want to go here to here. And then I am going to save this. And I'm going to look at spread. Save it. And then I'm going to share something different. I'm going to share this picture. Okay, so this should be a little bit bigger. Let me move myself over here, and then we're going to do a zoom in. And what the zoom in, Jonathan, please tell me if these images are good enough to see from this, or if I need to zoom it in a little bit more. So here we are looking at an option chain. These are calls, these are puts, okay? This is the, let me annotate, and let's do yellow. Okay, so this 12 right here, this is the buy side. We want to buy this, and we want to sell these. The ones that sell are on the left, the ones that buy are on the right. Same thing. You buy on the right and you sell on the left. Okay? Right, so this is buy and this is buy. Everything that you want to buy is on the right-hand side. Everything you want to sell is on the left-hand side, right? And that's how they'll build the chains. Now notice, look at how many calls have been traded. 53,000 of them, only 5,000 puts. So what this tells us here is that people are very bullish on the stock. This is way out in October. This is when this expires. And today, we have 3,800 contracts, right? So that means 38,000 shares of this stock at $12 somebody put a bet on, okay? So here's what I did. Let's do eraser here. Actually, we'll leave all those. So I said, hey, listen, I want to buy it at 12, but I want to sell it at 15. So here's what that means. I created the right over here. I created the right to buy at 12. That's an eraser, for heaven's sakes. Okay, at 12, showing you right there. And I created an obligation to sell at 15. What am I actually doing here? I'm hoping that price rises, which I think it will. And I've purchased for 75 cents something that could go $3. Okay? So if this went to maximum, it would mean in October, I would look at this price action coming right into $15, and I would be able to sell it for $3. 15 minus 12 is $3. Although it cost me 75 cents, I get $3 for it, so I really make $2.25 in this spread. Now, you might say, Anne-Marie, why do I want to create this obligation? What if it goes to 20? Absolutely, that's valid. But I don't care about it going to 20. I just want to make 100% on this particular spread that I took. I'm not looking for the maximum. I'm looking, notice, all returns follow something called, we're going to say it's almost like a bell distribution. It's actually called a Cauchy-Levy distribution, but it doesn't really matter. The tails are a little bit fat when volatility gets high, which is a lot of these kinds of places. I only care about collecting this piece. I'm not here to swing for the fences. Most sluggers have batting averages their batting averages are much lower than the guy who's always getting up to first. Okay, so I'm not swinging for the fences. Swinging for the fences would mean I would wait until this was $3 and then I would close a position. No, I'm just going to wait for this number at 75 to accumulate to 150. And then I'm going to tell you when that's happening. I'm going to tell you, hey, I want you to look at your Benzinga profile. Heavens, mouse. Did I give you the right share back? New share. Benzinga. Share. Yes. You're going to come in and it's going to say, hey, listen, you want to close this. So let me show you how that looks. For heaven's sakes, mouse. I'm going to show you that, how a closing one looks. I'm always going to be the one that has the biggest amount of data sitting in the Ideas tab. That's a beta function, and that's going to grow with us because I will put it here on my Anne-Marie Band trade site space in the tab here, but also on the ideas, and it's going to tell you exactly what's going to happen. So here it is. We had something called a butterfly. We'll talk about that in just a wee bit. But we put it on, and I said, all right, here's what's going to happen. This is a Tesla that we closed. Okay, so this is in certain positions. So I will say BTO, that means buy to open. I'll buy it in 10 lots. And so you will see, let me squeeze this out just a wee bit so that it looks more normal, right? So I'll write it out just like this. Buy to open, sell to open, buy to open. Now you're going to notice that I'm buying here and selling here, and then selling here and buying here. What this does is jam two spreads together. A long put spread, this was last week, it's why we closed everything out. We were banking on the short side of this motion. Here we go. And again, you can count on me for any trade that I have sitting in here. You'll be able to come right here and know, hey, listen, here's what she has open. Here's what it looks like when it's going to close. And from the Ideas tab and over here, I'm going to be replicating these spaces so you can see how all of the trades are progressing. Okay, so last week on the 13th, we said, hey, listen, we had a put butterfly. And so what a put butterfly is we buy to control the puts at $2.99. So that means no matter what the current price is, we get to sell that for $2.99. Then I sold to open, right? And I have it here, bought to open, BTO, sell to open, STO, and then bought to open, BTO. So here I bought at $2.99 and I sold at $2.95. Now, because these are puts, I am hoping that price action will go down. And so this was the actual closing of the trade. We actually opened it up on the 11th or 10th, somewhere around there, right? A couple of days. So that's how these trades will last. The trades that we have in the SPY, the Qs, and the IWM will last 2 to 3 days, sometimes 5, but rarely more than that, because we're looking at quick price action. So that's what we did here. This was the day that we put it on, and this was the first day that we closed part of it. And so we had a long put spread, which is buying the 229 to 299, then 295. And then we had the short put spread that came at 295 to 291. So what I'm really doing is jamming a long put spread and a short put spread together and estimating that that's what's going to happen to price. So in order to do that as a trader, you're going to get very good at seeing what happens to price in certain spaces and what happens to butterflies in certain spaces. At this juncture, I'm going to tell you everything, okay? All the reasons for working the trade, I'm just going to tell you everything coming to it and then say, hey, listen, here's what you want to go study for if you're looking at that thing, okay?
And
Yes.
just really quick, if I may, Joseph
Yes,
had a
of
good
course.
question.
Sure.
He said, so you're buying a 12 strike long call. He's talking about the one from today
Wheat, yes, of
on
course.
wheat. But
Uh-huh.
what are you doing with a 15 strike? Are you selling a 15
Yes.
call?
Yes, you'll see that it says buy to open and then sell to open. Yes, I'm selling the 15. Now, the reason I'm doing that is because if I buy the 12, it's going to be very expensive. It's going to be, they're going for about, remember, I bought 5 of these, okay? Each one of them 75 cents. So 75 times 5 is 375. Okay, so I'm spending $375, but I'm controlling 500 shares of wheat. If I had just bought the 12 and I wanted to control 500 shares, I would be spending more than $900. I don't want to do that. I want to use somebody else's money. And so when we use somebody else's money, we sell that option, right? So what does it mean if you sell a car and let's say you own the title, where's the money going? It's to you because you sold it, right? When you sell an option, you're selling it to the open market. So what are you going to get? You're going to get some money, and that money goes into your account. That's why controlling the 12 only costs 75 cents or $375 because you sold the 15 behind it. So like the lease of the vehicle, you're getting the control of the 12 strike and you're pushing off the far end because you're going to release the stock anyway, right? The goal is to use the leverage of the option to work in your favor. It's a completely different mental mechanic than buying stock. You're using that space that says, hey, this is a tool that was built and designed to hedge. And what does it design to hedge? Loss. What do you mean, Anne-Marie? Well, if I bought 500 shares of wheat going at $12, oh wait, that would be 12,000. Excuse me, I had said 1,200. So if I buy all of that, is that right? I can't think this morning. So what I'm saying to you is the following. When we sell the call, We're using somebody else's money to give us control of a $12 strike. See, here's the thing. That person that we sold that 15 to, let's say price only goes to $14. Let's say it never gets higher by October. Guess what happens to us? We still make $2. We still make $2 on the trade, less our 75-cent exposure, because we have control of the 12. So we get to do whatever we want to with it. The person who sold us the 15, if the price is 14, that 15 call is worthless, right? That's why we sell calls that are covered, because we want to collect that money and never have to surrender the stock. Or if we surrender the stock, it was a plan that we knew, hey, listen, if I hold 100 shares of this, I'm going to have to surrender that stock. Okay? So from that perspective, that's what we're doing. We are using somebody else's money to make it cheaper for us to engage in that position. This is one step deeper into the puzzle. We have actually two different spreads. We have a long put spread that says, hey, this is how much money I want to make if the price action does this. But we also have a short put spread that says, hey, just so long as the price doesn't go up to $2.95, I'm going to be in great shape. We get to control, listen to this, I bought 10 of these. We get to control 1,000 shares of the Qs for $22 per butterfly. And so what this is more leverage of using somebody else's money. So we have a long call spread, a long put spread here, and then a short put spread here. We jam them together. So now here's the next lingo. Here's how closing trade would look. We're going to close this whole position, right? And we did it on the 13th. Why did I do this? Because my put spreads expect price to go down, and I knew that we were going to bounce. So on the 13th in the morning, we were right down here. On the 13th, we closed this position, and we closed it for 97 cents. We bought it for 22 cents, and we closed it for 97. So from the big place, I had 1,000 shares that I was controlling. I spent $220. I sold it for $970 and collected $750 profit off of a $220 expense. How did that happen? I used somebody else's money. And I used somebody else's money, and I also knew the price action was going to rotate. Okay? And I did not want to be in the puts anymore. Because notice, if I buy a put at $2.99, it tells me that I have the right to sell it at $2.99. But if the current price is $301.93, if the price is $301.93, nobody's going to sell. That is worthless. That is a worthless put. And I knew that was going to happen, and I took the profit out of it before it happened. And so a closing position, that's how an open position looks. A closing position is STC. We're going to do the exact reverse. Buy to open, I'm going to sell to close. Sell to open, I'm going to buy to close. Buy to close, I'm going to sell to open. So we're going to sell to close the puts. We're going to buy to close those puts, and we're going to sell to close the puts. And this was another one of our excellent trades. We have a hit rate that is very high, and it's because I'm not swinging for the fences. So some days we'll only make 10 or 12%. Some days we'll make 300%. Some days we'll make 30%. Okay. And so your goal as a trader is to trade like a professional who is never swinging for the fences. They don't do that because they are trading other people's money, and they will lose their jobs if they lose your money.
At
Insignificant
least that's
fashion.
how we hope they trade, right?
Yes, exactly.
I
Exactly.
think, I mean, this is good. The buy to open and sell to open, buy to close, sell to close terminology is very important. I think there's some good questions here in the chat
Great.
about
Let's hit them.
maybe walking through that exact same thing, maybe even for the wheat trade. You know, I was even pulling this up on Thinkorswim, and people are asking, well, what price was this at when you call,
That was this
when you,
morning, right? So it was about $12.15.
right.
Yeah,
So
so
then
let's look at it.
I was looking at an
Mhm.
85-cent debit, I think, instead of a 75-cent debit. So they're
Yeah.
wondering
Oh,
maybe if
so here is a wonderful thing that you can do. What you want to do is, let's go here. Now it's up to 80, right? We bought it this morning at 75. Now it's up at 80. So what does that tell you? That tells you that we're trading in the right direction. More people are getting excited about buying it. And so your job as a trader for something that won't expire until October, you want to put it in the spread. I don't know that I have this one correct. Let's put the wheat in. You want to put it in something that says,
are you sharing your brokerage right
yes,
now?
let me do that. Okay, hang on 2 secs. Okay, you want, let me, new share, Thinkorswim. Okay, share. All right, do we have it?
Yes.
Okay, so what you want to do is down here on where the price is, where it says 80 cents debit, you want to hit the minus sign. For heaven's sakes, mouse. You want to hit the minus sign for 75 cents, where I bought it. You see it's going to say limit. Over here where it says day, you want to hit GTC. Good till cancel. Okay? Now, if you notice, you could also say, you know what, that's moved up really, really fast. I bet this price moves down and I can get it cheaper. My notes in the chat box that you'll also see on the Benzinga Pro platform, which I absolutely encourage you to participate in, because it's certainly where you're going to get all of this stuff and really get the go-tos for walking through these trades. You could also say, you know what, I think it's going to come in. It might be running really hot right now, but I think it's really going to come in. And so instead of maybe buying all 5 of them, I'm going to only buy 3 of them or 2 of them at 75. And then I'm going to see if I can get the others at 60. And you say GTC. GTC means good till canceled. And so what the platform will do for you wonderfully is that it will collect the money out of your account that you need to execute the trade, and they will leave it working in the queue. And when something works in the queue, it's going to be there so that you don't even have to watch it, right? You don't have to watch it at all. It's going to fill for you when they take the trade. So that's how you would sit it in. Let's say you come in and it's a swing trade that I have, and you haven't seen, you didn't get the price, you can just put it in there and go good till cancel. If you go, wow, well, I want to be in part of it, maybe you just buy one, right? Here's the goal. With everything that I recommend to you, it's going to be long style trades that give you butterflies, or something that we'll learn a little bit later on called an iron condor, which is also nothing but a vertical spread. Everything we do are going to be combinations of vertical spreads. Why is this called a vertical spread? Because I'm moving vertically, right? If I were moving horizontally over here, sideways like this, buying on the put side and on the call side, it would be called a straddle, because I'm straddling the fence, right? If I buy a put call and I buy if I buy a put and I buy a call, I'm at the same strike, I'm straddling the fence. I know it's going somewhere, I don't know where, but those are very expensive. So you can turn them into different kinds of trades by saying, hey, I don't want to spend all that money. I want to use somebody else's money so that I can get involved in the trade. And so these trades that I put up, the most you will ever see me buy a butterfly for is probably 60 cents, right? This is just a vertical spread. Vertical spreads are going to be a little more expensive. The butterfly says, hey, here's how a butterfly would look if you were putting it in there. If we had the vertical and it's 1 and 1, I'm going to simply hit my control tab and I'm going to sell another 15. That turns it into something called a back ratio. I'll never do that because it's got infinite loss attached to it. I will not do trades like that because I expect us to be young and learning, right? As people get further up the chain and they really want to follow through with a masterclass style study, these things will come into play. But here, I'm not going to do that. Everything is always going to be sitting in a space where this is going to cap our loss event. And so if I sell the 15 and I buy the 18, it turns into a butterfly. So I really have done the following. I've bought the 12 and sold the 15 in a spread. I've sold the 15 and bought the 18 in a spread. And then I've just jammed them all together. Here's my 12 and here's my 15. It becomes a butterfly. And that's really all it is. Now, that is now 45 cents. Buying the straight out spread, it cost 75. Buying the butterfly only cost 45. Now, why would we not do that here? Because there's a chance that wheat really does explode. If it doesn't and it chops around, we'll go back and we'll work on this just a little bit. But again, what are we looking for? 100 to 200% profit in these kinds of butterflies where we can pull the piece off. But see, the goal in any kind of spread is to use that notion of other people's money. All right, and so that's really what we are looking to do when we work as professionals in the market.
And there's a few questions here
Sure.
about, wait, so do I have to own the shares? Are these uncovered? And
No.
so just to reemphasize here, what's going on here is you don't have to own the shares and you have limited risk. So you're not going to lose your shirt on these if you do this correctly, because your total risk, you know your risk up front. It'll even say
Yes.
on your brokerage, when you execute the trade, my total risk is $375 or whatever it is, because it's
Yes.
just the difference between those two strike prices. So it's not the same as selling a naked call, which has
Yes.
unlimited risk.
And we will never do those here.
Right.
There's just too much. Listen, if you sell a put and the market's going straight up, awesome. You never have to worry about things. But see, we're in a very volatile market. And when the market becomes volatile, we have to control the style of trading that we are doing. And that's the key reason that Benzinga came and said, hey, listen, what can we put together that gives the trader control over every penny of risk? And that is exactly what you're looking at here. Exactly. Absolute and complete control over your risk.
Awesome. And then we had a few questions about time frame.
Sure.
I know you do day trades. You also do swing trades. This one for
Yes.
wheat, we were talking about a swing trade. So what kind
Yes.
of time frame are we looking at for the wheat trade compared to something that you were doing on the Qs or the SPY recently?
Okay, so because I have this way out in October, what I'm expecting is that the summer months give us peak and flow, and we might move a little sideways. So if you buy a straight out call, and again, this is not about owning any stock whatsoever. This is using the options as their own vehicle. You don't have to worry about the stock. You don't have to worry about being assigned. You don't have to worry about going in upside down on the trade. Nothing like that, to the extent of, hey, listen, I bought this butterfly. It's cost me $45. That's your total risk for the entire trade. No matter what happens, that's your total risk. So if you're looking at something for October, and I think to myself, I like the 12 strike, but I buy the 12 strike at $1.85, and then the stock decides it's going to do nothing, or it falls, right? When I put on a spread, like the one we're talking about, and I'm going to go back to the Analyze tab because that's stronger. When I go back to the spread that I'm putting on right here, it's telling me the following. Listen, you're going to be paying $100 less per controlling element of the 12 call. But if the chart does nothing and it goes sideways, you've sold the 15, and so you're not going to be looking at an option that's lost 50% of its value, because the option that you sold is also gaining value. Remember, every time you sell an option, you're selling someone an obligation, right? They're buying the right because they're buying the option from you. You're creating an obligation in yourself. But whenever you buy an option, several things begin to immediately move against you. First thing, price does nothing, option goes down. Price does a little bit, option goes down. Price moves a little bit more than nothing, but still not out of the range, price moves down. Why is that? Because of something called theta. And theta is time decay. Okay? And so every time you buy an option, you end up limiting the way you actually make money, because you've used all of your own money to speculate that a stock is going to do something. Okay? If it's a meme stock, awesome. But it could also go to zero, right? So if I just bought this and said, hey, listen, I'm going to look for a 50% loss and 100% gain. If my stock does absolutely nothing until, say, September, I'm going to get thrown out of this trade. But I won't get thrown out of this trade if I have the vertical, because wherever I'm losing because I bought it, I'm also making money because I sold it. Anytime you sell an option, you begin to make money in the following ways. Stock does nothing, you make money. Stock does a little bit, you make money. Stock does a lot but still doesn't get to your strike, you make money. all those ways, the same ways you lose money on a call option, you're going to be, excuse me, on a bought option, you're going to make that money on the sold side. You're always, that's why I love spreads. Yes, it limits my upside, but I don't care about my upside getting limited because I can go to the market just about every day and pull money out of it. I can because I've been doing it for 20 years, right? I've got an unbelievable amount of data sitting outside in the broad social stream space of all the trades I've made over many, many years that are proof in the pudding that I know what I'm doing. And I've been doing this because I trade to eat, right? And my goal here is to say, listen, when I first started trading, nobody told me about these inner workings. Nobody told me about price action. And I thought to myself, you know what? When I figure this out, and I will, I'm going to share what I know. Otherwise, I'm just shuffling money around for myself, and I really don't make a difference in the world on a more widespread impact. And that really is what I want to do. Now, could that be ego for me? Sure, right? It's more important. I can make money anytime I go to the market because I know how to manage risk. But I don't want to keep that for myself. I want to share it so I can actually say, hey, you know what? I was a part of their success. That to me makes a difference.
We really appreciate your expertise, Anne Marie. And just as a follow up here, let's say someone executes this trade, right?
Yes.
You notated in the trade on Benzinga Pro some
Yes.
potential stops and a potential area to add more if it went down to
Yes.
50 cents.
Yes.
So because someone's asking, wait, so we don't have to enter a stop order yet? Well, maybe you do, maybe you don't. What's your take on that?
My thought is you put a stop as soon as you get to your stop target. Now, the reason I say that is the following. First of all, I want to add at 50 cents. And 50 cents and the 30-cent stop are really far apart. If you decide, hey, I'm not going to add at 50, I'm just keeping my 75. And then if it comes into 30, I'm going to get out. I don't want to add any more risk, right? Because your risk is already $375. For me, I'm okay with $750 of risk total. And so if it comes back to 50, I'm going to add another 5 or 6 verticals. Because what that does is, one, I am trading with trend. And so that's when you know it's okay to add when something's pulling back because you're trading with the broad trend. You don't want to double down if you're trading against trend. That's not how you use trend. And on the boot camp coming up in this June in Benzinga, we're also going to be discussing those sorts of things. So, keep yourself tuned in for that soon. So what I will say is, if that happens, I'll be in the catbird seat because then, I've got maybe 67 cents is my risk, right? 62 cents as my total risk. And so I still want to make a 150 to close the position. Now, instead of 100%, I'm making 120% on the next group of options that I'm selling. So that really is it. The movement there, you can say, hey, I'm going to wait. What you don't want to do is if you see it moving and it gets to $1 and you go, oh my gosh, I really missed out on this trade. Do not chase it unless I've said, hey, this is a good place to add. Because why? My number one goal here, folks, is to help you understand how a professional manager of a vast portfolio, a la me, manages to keep risk down when she's managing her money. Yes, it is not exciting work, but it feels good if when you trade in and out, you're always trading green. You're going to be in much better shape psychologically and mentally, as well as from a portfolio balance, if you're just looking for the dribbles up the first, the big hit between first and second. Once in a while, you're going to have the shortstop looking and you're going to get that gap between second and third, and it's going to be awesome. But your goal is to get on base. And by that, I mean small incremental motions that allow you to go, hey, that's good. That's what you're going to get from me as the trader that's working with you in this space. If you say to yourself, hey, I'm looking for a home run on this, there are a lot of other traders out there that allow you to do that, but you can't put a vast amount of what it is you have under management for yourself exposed to something like that, because this is work, folks. It's not a lottery machine. It's not a slot. It's not Vegas. It isn't. Or else, I would be nowhere to be found and on a private island somewhere, potentially. I always say that, but I would never buy a private island. It's just too much work to get it up and running. So I would be in a whole cave somewhere very fun, or in some remote part of the world. So I love the South Pacific. If you have a chance to go, we're going to do some whale watching later, and we've just got all kinds of wonderful things to do because I do need time to relax. The great thing is I can come in here and spend an hour or two, and then, have the rest of my day to work with these things. And that's something you can do for yourself with whatever you want. But for me, it started in a journey, and I didn't have anybody at the beginning going, listen, here's how you look for the risk in a vertical. Here's how you want to close that. And you'll see that with every single trade that we're working on. You really, really will.
And for everybody here who's newer, you can open up a very low commitment account with a brokerage like TDA or some other brokerage. There's lots of brokerages that have paper trading accounts. So you can practice executing these trades on your brokerage with play money, so that you get used to, all right, this is a buy, this is a sell. Where's that vertical spread again? I don't want a single order. So practice that. Let us know if you need help too. That's what the Benzinga team is here for. And then that's why you have Anne Marie in there, so that you can ask us, hey, why did you pick this strike price? Well, why and you can comment on those ideas inside of Benzinga Pro, so that we can go back and forth and give you more feedback on those trades. So for anyone who's newer, practice those with paper money. And then if you don't have access to spreads on your broker, you can, first of all, learn how to do it, and then call them and say, hey, I know how to do this. I'm not trying to sell naked calls or anything. Just let me do vertical spreads. And that's your first step towards these options with limited risk, where that gives you more flexibility in the structure of the trade. Would you agree with that, Anne Marie?
Absolutely. I want to go through a couple of these very simple questions up here really quickly. I know you have to, and I also have to slip away. So I'm going to go through a few of these. Okay, one, someone says, how do you manage the risk and determine where to stop out? For me, I'm going to stop out at just under 50% because I'm looking for 2-to-1 or 3-to-1. That's usually going to be it. That's how I manage that. Very nice and simple from that space. It looks like my sell positions are naked. I am never naked any kind of option. If I have a 12 and I've sold a 15 and I have just as many 12s as 15, I'm not naked. If I have a butterfly and I have the 12 and a 15, and then I also have a 15 and an 18, I have 10 long options at 18, excuse me, and I have, sorry, that's for 10. I have 5 long options at 12, I have 5 long options at 18, and I have 10 long options at 15. So my long options are equal to my short options. So that is never naked. Okay, so that's what that is. Why did I use 12? I do like the open interest around there. I didn't want to go 11. It was too expensive. So that was a good suggestion there. How do I decide the expiration? I decide the expiration depending on what I believe the chart formation is telling me, what I know about the industry, what I know about summertime and the soft commodities complex. That's why I pick it. You can pick earlier ones, they can be cheaper, but that's how I pick it. It's my breadth of knowledge and expertise that you get that will allow you to participate from that space. All right. How can I learn options using the E-Trade platform? Listen, all your brokers want you to stay with them because they make money when you make a trade. So here's what you do. You call them up, call the trade desk and say, can you walk me through this option? I need to sell a spread. I need to buy a spread. Okay, what are you looking at? They will tell you exactly what to do. On top of that, every single platform that is worth their salt has videos on YouTube in terms of how to enter the space, right? You don't want to learn options through the E-Trade platform. You want to learn how to execute through your platform. You're going to learn about options from all the things that I share with you, particularly over time. Okay, so that's how you're going to do it. Listen, I know that it's scary when you're brand new with something like this. It's a powerful tool, but here are the things that you're always going to know. You're always going to know what your risk is. 1, your platform's going to tell you. 2, I'm going to tell you. You're always going to know what your potential reward is. And that's also very big. Somebody said, hey, why don't I just wait until the stock gets to 15? What if the stock never gets to 15? You didn't buy the stock, you bought the option. So you want to trade that option price. You want to watch that option move into a certain space. Now, there are some times that prices move and the options don't, and then we hit major resistance or major support, and then the price will start to erode on us. That's why we've got stops. That's why we've got me looking at the platform motion to say, hey, listen, I know the stop is at 30, but the chart's moved quite a bit and our options are not behaving properly. So we're going to have to get out at this 45-cent space. You don't want to wait until it falls into your stop if you know that it's going to end up falling into your stop. Now, some people might go, oh, how do you know? If you've been trading as long as me, you get pretty good clues on when that's going to happen.
And it helps, like for all this stuff, like it takes a long time and a lot of experience to know where to stop out. But if we want to hop over to Benzinga Pro, I just want to reiterate that's what these alerts are here for, right? So even if you're a beginner, even if you're mostly trading stocks, you can use all the other tools on Benzinga Pro, do your research, do your trading with stock shares, and then this way you can learn about options, dip your toes in the water, or if you're already trading options quite a bit, then Anne Marie, I mean, really just one or two of these trades a week would pay for the
You could pay
entire
for a whole
platform.
year. Yeah.
Exactly. Like it costs with the link I put in there, it's $912 for the whole year. That's $500 off, and you would pay that with a few of Anne Marie's trades. So you get all of these other tools on Benzinga Pro, the news, scanners, research, all of that, and because Anne Marie is on our team, you can literally pay for it with a few of those ideas. So that's a pretty awesome setup.
So I'm going to let you go into the Benzinga thing and step away. The last question I do want to answer is, one, if I scale in at 50, will I scale out? Also, that depends on what the chart is doing. Optimally, I don't really, if it falls in that far and it allows me to move, I'm not going to scale out. I'm just going to get right in because the chart had no business fading in the first place. And the very last thing from David, can you see if the debit call spread is going to be more profit potential than a credit put spread? It's not the profit you want to look at, David. It is the risk. So here's the thing. If I go 12.15, but then I go 12.9, right? You're looking at the spread, right? It gives me 130, right? Which is a ton more profit from a revenue perspective. I'm looking for 150 to close it. This credit is 130, but here's the problem. The second this price action starts pulling in, because I expect it to, I'm going to be underwater. If I go 8.11, I get 90 cents. It's exposing me to 210. Do not buy short put spreads in a market that is going sideways to down. You're like, but wheat is going straight up. Absolutely. We've gotten very comfortable selling put spreads, but you're going to get your face ripped off if you keep selling them when the market begins to dip. So if you want to sell the put spread, I would say if you want to choose the October, don't choose 11. Excuse me, don't choose 12. Maybe choose 11 and then take it when you've got about 50% gains. But again, here is the question. What happens if I get up tomorrow and the stock market's down 1,000 points? What if I get up tomorrow and the stock market's down 2,000 points? What's going to happen to me? See, if it is and it pulls wheat with it, you're down with no chance to get out, and you've lost 210% of your original exposure for that 90 cents. That is great when the market's going straight up. When you are looking at markets like the ones today, you have got to pay attention to what might go wrong, not how much more profit am I going to get if I sell the put.
That is so valuable. That will literally save people's financial future
Absolutely.
if they
Your
pay attention
accounts
to
will
that.
get shredded if we wake up one morning and something's blown up. Trust me on this. We've got a lot of things to be careful about. That's why we've put this program together. All right. So thank you for taking the time with me. I know I went long, Jonathan, and I know I went long, folks. I appreciate you sticking it out with me. and we will talk together soon. And Jonathan,
Absolutely.
I'll turn it over to you.
And really quick, where can they follow you other than Benzinga Pro? So like I know you're on Twitter, and then they were asking about
StockTwits.
the book that you
Yes,
wrote.
you can buy I have 2 books. You can buy them on Amazon. It's called The Trading Book. You can find me on StockTwits. You can find me on LinkedIn. You can find me on Facebook. Yeah, I'm all over the place. So
Awesome.
just look for me and ask questions, and we will refer. Of course, everything will refer right back to that Benzinga Pro platform.
Well, enjoy Hawaii. We'll all live vicariously through you.
Thank you, thank you.
And even though it's pretty nice in Michigan right now, but yeah, Hawaii's
Yeah, it's good
beautiful,
weather.
so enjoy it. And then I'm gonna, I guess, just thank you. I'll let you go so that you can get on with your day. It's pretty early for
Time for
you.
breakfast. Yeah.
And then I'm gonna hop over here to Benzinga Pro. So thanks again, Anne Marie,
Thank you so
and we look forward
much.
to seeing you next time.
Absolutely. Take care, everybody. Have fun trading.
Thanks. All right. So what I pulled up here in front of us while Anne Marie exits the webinar is just to reiterate where you can find all this stuff on Benzinga Pro. And by the way, those links that I put on there in the chat, that includes monthly subscriptions as well. So if you do it on an annual basis, it's like $912 for the year. If you do it on a monthly basis, it'll cost you over $1,300 for the year, but that's just $115 per month with that sale rate. So definitely don't miss out on those, and you can follow along with Anne Marie's trades right here within Benzinga Pro. I'm going to go ahead and zoom in here a little bit because you've got things like this closing trade alert and then this opening trade alert from this morning. Actually, it was afternoon Eastern time for this wheat trade. We covered today, the buy to open, sell to open terminology. And you can do all of this with us on Benzinga Pro, as well as if I zoom out here again, you'll see the full write-ups on the ideas tool within the system. So if you guys are familiar with our YouTube show, you'll see Spencer Israel in there, Mitch from various YouTube shows, Aaron. So you have Benzinga Pro staff putting in their stock picks, as well as Anne Marie giving her full write-up here on what she is buying and selling for those structured trades. So, and then I'm making sure this is in the other chat as well, so everyone has access to that, and you get me. So if you sign up, you get access to me and all of my amazing team. Ryan Faluna leads our customer success team. So you can just email me at jonathan@benzinga.com or give me a call. I'll throw my phone number in there as well, and I'd be happy to answer any questions you have. So yeah, that sale code is good today, and that'll be good through midnight Eastern time. So don't miss out on that. It'll save you like $500 a year, something like that. All right, I'm looking to see if there are more questions in the chat here. Thank you, Baki. Thank you, Akjim. Let's see here, Karen. Yeah, hopefully we answered the questions for you, Karen. I see in the YouTube chat. As far as she wrote the trading book, so you can look it up on Google, Amazon. Thank you, Paula. Let's see here. I know we didn't get to all the Q&A sessions on questions on Zoom, so I'm just going back here. Tom, yeah, I think she answered your question about scaling in and scaling out, how it's just a case by case basis there. But the good thing is she tells you exactly what she's doing with those trades here in Benzinga Pro. So there's no question whatsoever in terms of what is Anne Marie doing. If she posts something in here, she took it with her own money. And she's telling you the number of contracts. So she has a lot of money that she trades futures with as well. She doesn't put all of that in here. So this isn't all of her trades, but if she posts a trade, she is making it. So, I don't have to say that much more about it, but it's very, very rare that you would have that type of transparency with someone that you would follow in trading. Ron, great question. What if your brokerage account will not let you do vertical spreads? Like Anne Marie was saying, they want you as a customer, they want to make money off of you. So what I would recommend is go through these trades here, test them out on a paper trading account. If your brokerage doesn't have one, then open one up. And then call your broker. Just like Anne Marie said, say, hey, I want to execute a vertical spread or a butterfly. It has limited risk. Can you walk me through that and help me do that? And most likely they'll help you because they want your money. And if they're offering good customer service. So yeah, that would be what I would do. Let's see here. Just seeing more questions in here. Yeah, Josh, just Benzinga does carry APIs, so reach out to us, to our licensing team, licensing at benzinga.com. If you need APIs for anything like the news, the earnings, ratings, we've got all of that data in here, and it is available via API, although that is a separate subscription. Timothy, any idea? It just disappeared there. Her trading methodology, what the annual rate of return would be, good and bad factored in. Rate of return. Yeah, so Anne Marie just started working with us on Benzinga Pro specifically like a month ago. So we don't have a full year of data, but on average, like she was saying, it's anywhere, like, of course, you might have to stop out on some trades at 50%. So if you have to stop out at 50%, but then your goal is to make, say, 200% on some of those swing trades, then you're going to get somewhere in between there in terms of your overall average rate of return. And a lot of these day trades, she might not be looking to make 200%. So yeah, I should ask her that because I don't actually have that number on hand here, but that just gives you some idea. Like I stop out at 50% loss, but then my goal is a 2-to-1 ratio there on the profit to risk. Yeah, Ron, I would say, maybe reach out to us at Benzinga. We're not a brokerage, but we'd be happy to discuss that further in terms of the brokerage stuff. Jim, yeah, the recording, if you registered for this session, we will send you a recording today or early tomorrow, hopefully today. So you can expect that in your email inbox. I'll just bring this over here so I'm not looking to the side. Let's see, Rob, yep, recordings will be sent. How to use that VWAP scanner on Benzinga Pro. Yeah, you got it, Suri. I've got a little bit of time here. So Suri's asking about the scanner on Benzinga Pro. So we showed you where to find all of Anne Marie's trades here in the chat. But if I open up a new workspace here, notice how the chat is in the upper left corner. So that's where you can open it or close it. And the trades that we're looking at are under Anne Marie Band trades. There are other chats available, but this is the one with Anne Marie Band. And then you have other tools like our scanner. So let's see here. Surya was looking for the VWAP scanner. And so what you have here is the top gainers for the day, change percent from the previous close. And you can add different filters. So price and volume, reference filter, so you can scan a watch list, fundamentals like market cap. You also have short percent and float in here. And so VWAP, I think, would be on price and volume. We've got VWAP right here. And you could say percent from VWAP. So you could say whether it's up or down or within a certain percentage. So I could say over 2%, or I could give it a specific VWAP variable there. And then you could combine that with other filters. Like I could say, I only want to see stocks that are up maybe 0.5% in the past 60 seconds. And then I can also add that variable to my table and even sort by it. So now I can see, well, what in the world is going on with BNOX, Bionomics Limited. That looks like special situation, 3%. So, I mean, anything that's moving that much within 60 seconds has to be extremely volatile. But you can see here where I'm finding some companies that are meeting those exact parameters, and I can see my active filters by clicking on active in the upper left corner. Timothy, is there a good tutorial on how to use Benzinga Pro? A lot of content. Yeah. So there's a whole separate webinar that I did on how to use all of these different technical tools on Benzinga Pro. And there are strategy videos in addition to Anne Marie's strategy. You can find all this through our help site through this question mark in the upper right corner. So once you have access to Benzinga Pro, you come to this question mark in the upper right corner, click help. That'll take you to our help site. And then right here is tutorial videos. So you can click on that, and it has momentum trading, ideas tool, scanner, news feed, details, calendar, watch list, all these different tools. They're just little 5 to 10 minute videos showing you how to use each of those tools. And then separately, we have strategy outlines. So we have unusual options activity. Someone was talking about open interest earlier. You can find that in there. Analyst ratings, buy the dip, simple gap and go strategy. This is a really great place for beginners to start. This is just talking stocks, not really for options, but it'll show you companies that are really moving that morning, kind of like Anne Marie was talking about. She preps for her day, seeing what's moving each morning. And you can use the movers tool as well as doing technical analysis on our charts. So let's see here. Esther, yes, can we do technical analysis? So if I want to bring one of these up, like which one of these should I do? If I want to do some technical analysis on high tide, I could click on this chart button here. Notice how it's different from the overview button. So I get a more advanced chart from Powered by TradingView. And it looks like it's bouncing here off of a low. And so I could map out on the day chart significant levels. Like I have horizontal lines here that I could map out. I could also look at a shorter time frame, like a 5-minute time frame. And you can see here that it's nearing the previous day's high. So that's going to be an important level for me to watch. You can also add things like the VWAP, RSI, etc. from the indicators button here on the chart. I could type in relative strength index to add RSI, as well as lots of stuff you can customize, like the color to make it easier to read, so on and so forth. So Esther, yes, you can do technical analysis here within Benzinga Pro, and you could take notes on the important levels or what the news catalyst is that's causing that volatility. Like here, I could type in 231, previous day high, and I can add that. So it'll be saved here, and if I add it to a watch list, those notes would also be available on my watch list. Yes, Timothy, this should save automatically for you to your browser. You'll notice that I also have multiple workspaces open with different filters, different tools, and I can save all of this in one layout by clicking on these 3 dots in the upper right corner. So I click on those 3 dots, click on layouts. I have all these different saved layouts, so I just click load if I want to load any of those. Or here's my current layout, where I click save, it brings it up to the save section, and then I can just say, webinar Anne Marie. enter, and now that's saved. So whenever I want to revert to those settings, I open this up, click load, and I'm good to go. And so I do want to just say one more time, don't miss out on the 35% off. That's if you purchase annually, you'll save like an extra $400. So it's $912 for the whole year or $115 per month. And that's available in both of the chats here. Let me know if you have any questions as well. I'll just repost my contact info. Let's see here. Oh, that did not post. I can just copy the right thing here. There we go. All right. So the code is Moneyball. So if you click on the link, the code is Moneyball, Josh. It should be pre-filled for you on the checkout page. And yeah, I'll just go there really quick. pro.benzinga. Actually, I'll just follow the link. There we go. So here's a link. Moneyball is already applied. The top one is for the annual plan. So normally that's $1,404 per year or $117 a month. And you can get that for $912 per year. You just throw in your credit card info, buy now or PayPal. Or you can do the same thing for the monthly one, and that'll be $115 per month instead of $177 per month is the normal price. Alrighty. And there is a 7-day money back guarantee on this. So literally you could purchase this today and take advantage of some of Anne Marie's trades over the next week. And if you don't like it, we'll give you a full refund. That simple. So definitely like very low risk. And you have the opportunity to make trades like this where she's made, a few $100s to $1,000 sometimes within a day or two with some of these trades. Yeah, Timothy, just give me a call if you have questions about plans. Basically, Anne Marie's trades are included in Essential Plan and Higher. There is another mentorship program with Nick Shaheen with the Options Inner Circle. So Anne Marie is super busy or on vacation. So she doesn't have live trading all day, every day with us, but she's posting these trades throughout the day. Versus Nick Shaheen has a live trading room where you can trade with him 8 to 9 hours a day. And he's also posting multiple swing trades per day. And then he has a 2.5 hour charting session every weekend. So if you have more questions about some of these other plans, feel free to reach out to me and we can figure out what works best for you. If you have more time to dedicate towards your trading education, then that could definitely be a good fit. Michael, do you want to open a Benzinga office in Israel? We definitely want to go international. I know we have a lot of connections in Canada, India, Israel, Europe, a ton of connections in India. So hopefully we can just expand our reach all over the world. Yeah, Timothy, I'll be around today until around 5:30 Eastern time. So I'll be on the phones and on email right after this. So shoot me an email or give me a call. Let's see here. Is there a way to receive alerts from Anne? Hytham, great question. So I'm actually currently working on that in terms of we're going to add a lot more functionality to this ideas tool so that hopefully in the near future you can get push notifications with these items. Right now, this is all visual. So that's our current status is right now, you'd pretty much have to have this up. But I'm working on it so that you can get a push notification. Just like right now, you can get push notifications for your watch list. If you have a watch list built on Benzinga Pro, then you can download our app and get push notifications each time there's a news item on your watch list. We just have to set that up with the chat capabilities so you can get alerts for Anne Marie's trades. Great question. Let's see here. Shakira, yes, you can call me today. I'll throw my phone number on there again, and I'd be happy to help. And for anyone that has any other programs or products with Benzinga, I realize we do a lot here. So we work with a few different educators. Anne Marie is the only one that comes with the essential plan of Benzinga Pro. Most of these other educators, you'd have to pay a decent amount more to access their programs. But if you already have one of those programs, we could definitely talk about, and you don't have access to Benzinga Pro already, we could give you a custom discount. Just reach out to me directly and we'll set that up. William, retired, now going options full time. What's the trial period? Already a longtime member of MarketSmith, looking to add option skill set. I am like, oh, nice. You're in Hawaii. Fantastic. Well, so there is a 7-day money back guarantee on all of our subscriptions. So that way you'd be guaranteed a 7-day refund period where if you change your mind, we give you all your money back. And that way you can make sure it's a good fit for you. Thank you, Alba. I'm glad that you are a fan. We're definitely here to help everyone. Raj Kumar, I do have lifetime payment plans available. And actually, as of right now, we actually just did an agreement with a payment financing group called Klarna, where you could get a lifetime subscription to Benzinga Pro for like $6 or $7 grand, but pay it over 24 months if you want to. So that way you'd be paying, I don't know, $400, $300 or $400 a month maybe, but you could get a lifetime subscription and just pay it over 2 years. Or you could pay up front. I think list price is about $7,500 for a lifetime subscription. Yeah, absolutely. Just give me a call. We can make sure it's all crystal clear on that. And we always, our lifetime subscribers are like the VIPs, so we'll take care of you. Fantastic. Let's see, I'm making sure, let's see, if anyone didn't get their question answered in the Q&A, I apologize. But all I got to say is stay tuned for more content from us. I know how crazy it can be trying to learn how to execute these trades on your brokerage. Some of you came in here not knowing exactly what a vertical spread was, or you didn't even know that you could sell a contract. And so just know that we're here for you, and we're going to publish a lot more content. Definitely check out that help site on Benzinga Pro. And then we do have some good options mentorship tutorial videos on here. These are with Nick Shaheen, but they cover similar topics like vertical spreads. Like right here, what is a spread? You've got a 10-minute video right here and showing you, actually someone mentioned E-Trade earlier, showing you how to execute a trade on E-Trade. Mary, let's see, can you repeat what Anne Marie said about the Qs? Does she play the Qs 1 week out max? So she gave a trade on the Qs earlier this week, I believe. If you can see right here, I have actually last trade of the day. I should zoom in on this. The Qs are right here. Let's see here, zooming in. Okay, so she closed the SPY, butterfly, Qs. So she was opening this trade for a 28-cent debit, and she believed that prices would be trapped in a range. So she was buying 10 puts on the Q with a strike of 296, and selling 20 puts at the 292 strike. So she was expecting some downward motion. And And then she doesn't want to have any naked puts, so she'll buy 10 at the 288 strike price to protect us from more downside exposure. So these are three different types of contracts. Basically, it's like she was saying before, she was expecting some downward motion, but she didn't want to have any naked puts, so she bought some more at a lower strike price to protect her downside exposure. She doesn't really say in here what the time frame is in terms of it being trapped within that range. But she would definitely, this is obviously a shorter term situation here. If it was for the 16th of May, and when was this executed? This was executed 5 days ago. And so today is the 16th. So that is a 1 week time frame. Hopefully that answered your. I wouldn't limit anything to 1 week max, Mary. But okay, that might be why you were asking that. This was a 1 week expiration, but she'll definitely do stuff that goes out further than that. Awesome. I look forward to talking with you, William. All right, I have to get out of here because there's actually another great webinar that's going to be playing at I think it'll be on at 5 o'clock, but they like to get things going around 4 o'clock with Rodrigo, Matt Maley. That's with one of our other analysts. But don't miss out on Benzinga Pro Essential. Use that link or give me a call, and you can expect more great content from myself and Anne Marie soon. So until next time, happy trading.